Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the once-a-month news piece that moves the markets, and we had one of those today. So, Rob, welcome back to Golden Rule Radio.
Thank you. I'm glad to be here.
Yeah, and following on the heels of our quarter-point rate hike, what do you see taking place both in the equity and the precious metals markets today?
Well, you would have thought the Dow would have expected the rate hike because everybody did, and yet it slipped another 250 points so far today. Gold was anticipating it and stayed up there. So we're around 2024, 2025 on the gold price. And you and I were talking about that the last couple of days. It looks like gold's moving higher.
Yeah, it was interesting. There's an occasional event that I see take place in a lot of markets when you're looking kind of like zeroing in on the nitty gritty of markets. And that's when you see a trading range where we'll just stick with gold because that's what we're talking about. When you're seeing a trading range in something like gold or the stock market or even an individual stock or currency, I have noticed this phenomenon through the years that a couple days before some type of news event that you know is coming, you will see a spike up or a spike down over a period of a very short amount of time, 30 minutes, an hour, something like that, to where you will run up to the top of that pricing range very, very quickly for no reason whatsoever and turn around and come right back down.
And we saw that not only in gold, but we saw that in silver.
We saw that very clearly in silver. In fact, I'm not even the one who caught it, so I have to give credit to Robert, who is another one of our regulars here on Golden Rule Radio that a lot of you know out there. So Robert sent me an email first thing Monday morning, hey, did you catch the silver spike this morning? Now, when I look at something like that, here's what I see. You know, normal traders, we tend to put, say, buy and sell orders in at certain prices or stop losses in at certain prices. And you tend to see a lot of smaller traders all kind of cumulatively together. You know, my couple $1,000 may not mean anything, but you take 100 million of us and it adds up to a lot of money. So you'll see us kind of play by a certain set of rules when it comes to trading and protecting losses and profits and so on and so forth. But what you'll occasionally see is out of nowhere, you'll have these spikes sometimes run you up or down to where you're going to know there's going to be a significant number of standing orders already sitting there. Well, and we saw something that very much appears like that happen certainly on Monday in silver this week, to where it got me thinking, okay, with the FOMC coming out this week and expected interest rate hike, I would have assumed a buy the rumor, sell the news kind of event to take place until I saw what happened on Monday, to where I now started thinking, okay, somebody purposefully went in and bought out a bunch of standing trade orders sitting at a higher price than silver. Now, those trade orders all fill very quickly, and it just bumps the price back down, and silver just kind of stayed there for the next day or two. But lo and behold, as soon as the thing that we knew was going to happen did happen, Fed funds rate goes up another quarter point. For some reason, there's not selling of the news in things like gold and silver right now. In fact, gold and silver are climbing following that event taking place. So
Right.
I don't know if it's me just being paranoid, but I think you can sometimes see those sort of why did this happen event. I think silver moved 4%, 4.5% up and down on Monday. Like it was a pretty significant move in a very short period of time.
Well, and getting back to what you said a second ago, just because you're paranoid doesn't mean they're not after you.
Fair.
So somebody is playing with the tape. I don't think they've got their thumb suppressing the price. I think they're actually anticipating, it looks like they're clearing the decks above to make room for a higher move, which is something that we've kind of stalled out at 2,000. We've talked about that for gold, and 25 for silver. We've talked about that in weeks past. I think there's blue sky.
I think there very likely could be. And that's something else we've talked about in the past is, you know, we've talked about this in weeks past, is you've got to shake the tree to get the fruit to fall, right?
Right.
So when you have the type of movement up in, say, metals like we've had since November and certainly since March,
you would expect a pullback.
You
and we
would.
talked about that a couple of weeks ago.
Right. But there's another thing you can do if it doesn't pull back, and that's just park it. Just park the car for a few weeks because that'll shake all of that off, and you don't necessarily have to have the pullback. You can just have some stair steps up Big
Right.
jump up, sit sideways for a few weeks.
Right.
So if we see some breakout momentum here in especially silver, and I know we talked about this last week or the week before, I have this feeling that I think gold might be looking like it could pull back, but silver doesn't yet. Well, that could still play out, and what concerns me is what if gold doesn't either? Maybe we did shake the tree.
Well, we saw the same kind of chart pattern for gold, not as extreme, not a 4% rally and drop in the price of gold, but still the chart looked very identical to the chart on silver,
Right.
where it shot up for no reason and then plateaued and then fell right back down
Right.
within an hour. Looking forward, I know we're getting a lot of people calling us. They're worried about a bank event happening sometime in May, a central bank digital currency happening sometime in May. These are things that are filling the airwaves. A lot of chatter about silver, and you and I were talking about that. We're at 25 right now. Premiums on rounds are, let's say, 18 to 20%. Premiums on silver eagles are, I want to say, about 50 to 60% over melt.
Right.
Premiums on junk bags are, I think, about 35 to 40%. I'd have to check the numbers, but I'm fairly close. What happens to these premiums that people are buying now when we hit $50 or $100 silver, which we will? What do you think?
When we hit the prices, I don't know. I would argue it depends on which side of the market we're hitting them from. If we're on our way up to 100, you could see those premiums holding.
You really think?
Well, again, I think it depends on which side you're coming at it from. If you're in that third phase of the bull market, I mean, you've been through this more times than I have, but I remember 2011 when things were screaming. And
well, that's true.
You think you have a hard time getting silver now.
Yeah, just wait.
Yeah, wait till the third phase of any bull market. It becomes impossible at that point.
Well, and that's a valid point. I expect premiums to evaporate.
Well, and they're going to eventually,
Right.
whether it happens right when we say hit $100 silver or whatever the magic number ends up being. But eventually bull markets run their course
Right.
and premiums do go back to zero or at least lower than they're at
Well,
now.
it doesn't even need to run its course because I anticipate $50 silver. I don't know if that'll happen this year, but certainly within 2 years, I think $50 silver is definitely on the table. When we hit there, talk about people with sell orders at different chart points. There's a lot of people who are going to be cashing in their silver when they get back to 50 or 100, just because they do that. And
Yeah.
then we see premiums evaporate because not every dealer can actually hedge this position that they are just buying. So they either have to put it under the counter and hope somebody comes walking in to buy it, or they have to lay it off into the market. And so I'm anticipating when we get to $50 or $100 silver, especially $100 silver, I think there'll be a lot of selling going on, a lot of premiums evaporating, and then we can come back out of the bars that we've put people in and back into some kind of 1 ounce product and out of the 1,000-ounce bars. The problem I see are the spreads, the buy-sell spreads,
Sure.
not only in silver but also the smaller gold coins. I checked the spread on a 10th-ounce gold eagle this morning. It's a 19.6% spread, buying and selling. That's outrageous.
On a coin made probably in the last few months.
Right. There's nothing rare about that. That's higher than our rare coin spreads. Our rare coin spreads are like 15 to 17%. So we're looking at bullion coins people are rushing to buy, thinking that, hey, the banks are going to be all folding. We're having a systemic banking crisis or a new currency coming with a devaluation sometime in May. And that's what people are being told. I don't want to necessarily say that'll never happen. I just don't think it's going to happen in the next few weeks. I think we are on the wrong road, and I think there are serious consequences for what we have done as a country politically and financially, and it is going to catch up with us, but I don't think it's going to happen in the next few weeks. In the meantime, people are paying significant premiums for products like silver coins and smaller gold coins. And that's our concern, is what happens to those premiums when we hit $3,000 gold, $5,000 gold, $50 silver, $100 silver. I don't mind paying a premium for something. I just want it to be worth it.
Yeah, Rob, and I think that's the key point. There are quality products out there that always have a premium.
Right.
And then there are quality products out there that almost never have a premium. And those are two different categories of things.
I'm trying to get used to the new normal. Financially, politically, socially, things are changing at a very rapid pace and people are wondering what to do. I would encourage people to contact their advisor here at McIlvaney Precious Metals and say, what are my options? Where's value right now? Because it is, and I've said this many times, it is like buying an airplane. You don't have to call us and purchase from us. You can do it on your own, but it's like buying an airplane. You can fly it yourself, or it's kind of nice to have a person sitting in the seat across from you that's done this a while.
Well, and I think that's a really good point. And you know, it's interesting when we look at this premium thing, and we've been talking about it for months now.
Yeah.
What we feel like is a
reasonable premium
compared to where reality is right now.
Well, and that's an excellent point. Where are we going, and how soon are we going to get there?
And then what happens when we do? I think you can look at history and previous markets. I mean, things do rhyme to some extent.
They do.
For instance, I think back to the last major bull market I got to be a part of, where we started following the stock market crash in '08. Gold starts rising. It peaks out in 2011. Silver took longer to start and finished earlier. But I think back to where the premiums were then, and the highest percentage premiums we saw was like 6 or 9 months after the bull market had already peaked.
And I missed some opportunities to trade those markets. We got to over 100 to 1. I think we actually touched 120 to 1 silver gold ratio, and probably should have come out of some of my gold positions into silver. But what stopped me from doing that were the premiums that my clients were going to pay.
Because it wasn't 120 to 1
no,
in actuality.
In actuality, I think when you did the math, and I had to take my boots off. You know, I'm the reason why God made calculators. But when I did the math, it was more like 85 to 1 or 90 to 1. And that kept me from making those moves, or at least initiating those moves with my clients. And I did some. I didn't blow it all off, but I was reluctant. And the same thing I think we will see happening with the silver gold premium. We are right around 79, 80 ounces of silver to an ounce of gold on paper, okay? We are going to see that ratio narrow. And you and I were talking about this earlier. What's the average ratio between silver and gold over the last 3 decades?
Well, it's obviously been trailing up. I think it currently sits somewhere in the low to mid 50s.
So all the people on radio and TV saying, we're going to buy all the silver, and when it gets to 30 to 1 or 20 to 1, we're going to turn around and buy gold. How do you feel about that?
Do you know the last time gold silver was at 20 to 1?
Yeah.
It was like 1930.
I was going to say 100 years ago.
Yeah. So, do you know how many times gold and silver have bounced between, say, 40 and 80 over the last 20 years?
Oh.
Half a dozen,
yeah.
Maybe? 4, 5, 6, something like that.
So I think we need to dampen our enthusiasm on the silver-gold ratio and say, look, if we can get to 50 to 1, we're going to start making moves.
Oh, certainly, especially if you got in over the last couple of years where we were at spot price 90, 100, 110, which means your actual entry point was probably 70, 80, 90.
Yeah.
Depending on the physical product.
Yeah, so once you take into account what it actually costs you to buy it and sell it.
Right.
Versus what you can get in return. The numbers narrow when you start adding what it actually costs to own it and then turn around and trade it.
And is there anything more powerful than stacking up ounces and more ounces as we're going through an inflationary cycle coupled with rising interest rates, no intention whatsoever for the Federal Reserve to slow down anytime here soon, and a federal government that just, who cares what it costs, keep borrowing and let's raise the spending caps.
Yeah, they are not going to change direction. You know, they're very reluctant to stop spending on all their pet projects and all the rest of the things that this government is driving right now. I think what we're going to see is a continuing papering over the banking crisis, soon to be a pension crisis, soon to be a Social Security crisis. I mean, there's no stopping it.
No. Well, we mentioned silver, and actually quite a different show today. You know, we talk a lot about charts, talk about digging not just into, what's GLD doing and what's spot price, but actually really narrowing down into like what's actually taking place within a specific market. So it's fun to really focus in on silver a little bit because I think you're right. A lot of people are asking about silver, and I think that's why the premiums are so high.
Right.
I think a lot of the reasons why people who may not be as familiar with metals are looking at metals is because of the banking crisis, which we touched on a second ago. There's a third thing we wanted to talk about that I feel like we're transitioning here too, and I would argue this is probably the third most prevalent thing we're getting asked about right now, and that's what you're mentioning. What if papering over a problem stops becoming paper?
Right.
And I had a long conversation with a client of mine this morning about this because I think, and I don't want to use terms like misinformation, but I think there's a lot of scare tactic salesmanship taking place involving global digital currency or U.S. domestic digital currency, CBDC, central bank digital currency. And I think it's something that while I've argued we're probably farther away from than most people think we are, I'm still going to see it in at least my lifetime. And probably sooner than that's looking grim. So,
yeah, I think we're at least a year or two out from that. The growth of technology is exponential right now, and they need that. The energy needed to create a blockchain currency crypto like Bitcoin or Ethereum is tremendous, and the computing power needed to make that happen is extensive. So it's not an instant thing. We're being driven by ideologues. These are people who are not motivated by market-driven forces. They have an ideology that is driving them. And we can go down that road. But when you tell people that they'll all be driving electric cars by 2030, that's ideological. That's not market-driven. When you try to convert a grid to renewable energy, solar and wind, those items, yes, they are out there and they do work, but it's ideologically driven, not market driven, because the cost to go to renewable energy and electric vehicles, and the list goes on and on and on, it's not market driven. It's not cost effective. What ends up happening is that the cost to heat your home and drive your car and put food on the table goes through the roof. So when we start talking about some kind of crypto dollar, that's not market driven. It's ideologically driven. The question becomes, what are they going for? What are they driving us towards? Why is this so important to them? And the answers to those questions become very sobering.
Well, on the flip side, when you have a ideological government-driven initiative that isn't market-driven, I think what we're seeing take place right now is the market is responding by making its own market-driven decisions.
Right, and that's what's driving the gold and silver market right now. That's why the demand is so strong, because people are voting with their feet.
Exactly. Well, Rob, I appreciate you coming back in again. I think Tori's back next week, so we'll have Rob back on in 2 weeks and see how our predictions are turning out. I greatly appreciate your analogy earlier today, because one of the things I was noticing while we were talking is not a lot of charts today, but man, we dug into the silver quite a bit. And I think we're getting to the point in the bull market where, you know, we do try to put a pretty decent snapshot manual in front of you when we do this show every week, but I think there's nothing like hiring a pilot. So I know a lot of our listeners are already clients of ours. If you're not a client of McIlvaney Precious Metals, give us a call. We're happy to talk with your personal portfolio, some of the decisions you're making in your precious metals portfolio, see if we can bring anything to the table to help you kind of keep things organized and to add a little bit of purpose into and targets to look for as we're progressing through the market. So that's going to do it this week. You can find out more on our website, McIlvaney.com. We're on Facebook at McIlvaney Financial, Twitter at ICA Gold, or you can give us a call at 800-525-9556. Thanks for listening. Have a great week.